his new book, which comes out after Money Master the Game, which was a #1 New York Times bestselling book. And now I want to ask him, so Tony, you already had this amazing financial book. Why the second book?
Well, that's a good question because, I wrote 670 pages in Money Master the Game, and I think I don't like writing. But I was so obsessed because after 2008, seeing everybody lose, their homes and losing half of their net worth and seeing nothing be done about it, about 2 years later, I finally said, look, I've got this relationship with people like Paul Tudor Jones that I've coached for 24 years. He hasn't lost money in 24 years.
Amazing.
I've got access. What if I interviewed the 50 smartest people in the world, the Warren Buffetts, the Carl Icahns, right? The Ray Dalios. And so I did, and I'm thrilled with that book. It's #1 bestseller, not because of me, but because all these incredibly genius people, it's all their content that I delivered here. And we fed 100 million people. I fed 50 million through the book, and then I matched it for another 50 million, and we did it again last year. So I thought, with all the fear that's gone on the last 2 years, and you're seeing things in the marketplace you've never seen in history, negative interest rates. The Wall Street Journal hired a historian to say, when was the last time we've had negative interest rates? And the answer was never. In the 5,000 years of banking history, in 5,000 years, you always gave them money, they paid you for your money, and then they loaned it to somebody else to make money. It's the first time in history you pay them to give them your money. It's insane. Toyota has a bond out right now, Bill, that's 0.0006. It'll take 69,000 years for you to double your money if you invest in that bond. People are buying 50-year Italian bonds for 2.4%, and it's oversubscribed. A government that doesn't last very long, that's not very stable. So we're living in crazy times. And where it really hit me, Bill, and why I decided to write this book was about maybe a year and a half ago. Mm-hmm. And I was sitting down with my platinum partners, and I bring them together each year, and we bring like 6 or 7 multi-billionaires that started with nothing and some of the best investment geniuses in the world. We spent a week going like, how do you protect yourself and how do you grow? And so I thought, who better to bring at this crazy time to get answers than the former Fed chair, right? It's like if you want to know what's going on, go to Alan Greenspan. I mean, he was Fed chair for 19 years, 4 presidents, right? Some were 8-year presidents. He's around for a long time. So I spent 2.5 hours offline talking to him and about 2 hours with him on stage. And we talked about everything you can imagine, the craziness of the markets and where we are today. And then my final question to him was, look, if you were made back the head of the Fed today, what's the first thing you would do? And he paused, and he looked at me, and paused again. Everybody's like, wait a bated breath, and he leaned in, and he said, resign. so I when he says resign, when he doesn't know where the hell it's going, Howard Marks said to me, as head of Oak Tree Capital, they manage $100 billion. And in 2008, when everything was melting down, they were investing almost $1 billion a week in stocks because he felt they're just too cheap. He's a brilliant guy. He said to me, Tony, if you're not confused by what's going on, you don't know what's going on.
Well, so here's what's saying. So I loved Money Master the Game. I loved the book. I think it was fantastic because the one before that I read The Intelligent Investor, and it's like an economics book written by an economics professor for economics professors. And it's like, even though Warren Buffett made all his fortunes off that book, it's really dry. Money Master the Game was easy to read, really wonderful, and this one goes even further. And I think the brilliance of this book is the simplicity of which you boil it down. I thought the 620 pages was a great boiled down version, but you went even further and went to less than 200 pages. You bring all the insights of the 50 top most brilliant financial minds in the world into this book. And I think it's just amazing. So
I really appreciate it.
So let's ask you this. So how do you retire rich? Right? This is the question. We're writing this for Inc. magazine, Entrepreneur magazine. We're going to have this published up there. And the #1 thing that entrepreneurs want to know is, how do I retire rich? So the question is, you talk about the core 4. Let's go into the core 4 because those 4 simplistic ideas are the most important things to help people build their wealth and make sure that they maintain it.
There are so many things that can mess up your business even when you're brilliant. I mean, the government can change a rule instantaneously. Your Airbnb or your car sharing experience, one of our car sharing companies, I'm blanking out besides Lyft, what am I thinking of? Uber, and they change the rules and you're out of business in that country or that city or that state, just one example, or new competition or new technology. All these things can disrupt. So I teach people how to take advantage of all those opportunities, but you got to have a business. And the way you get that business is really simple. No matter how much you're pouring into your business. Someone taught me this years ago, Ken Blanchard, who wrote the 1 Minute Manager.
Yep.
Years ago, I helped him take 5 strokes off his golf game. I don't play golf. And he thought I was God. So he said, I got to give back to you now. I said, well, how do you want to give back? He said, you're about to, put out your first book. It was Unlimited Power. I was 24. And he said, I'm going to give you the best financial advice that was given to me. And he said, a business will always spend whatever capital is available. Because when you're growing your business, the demand is always there. And he said, so what you have to do is take some money off the table that the business never sees. And he said, this guy told me before I wrote 1 Minute Manager, the business will get the benefit of that book, like all the customers, but all the income should go into a separate account that you never touch, and it just gets invested. You don't spend it. And he convinced me to do that with both my book, and then I decided to do it with my first infomercials. Yeah. And that's what made me wealthy, because now I've made tons of money in businesses and so forth. But during the tough times when it looked like near bankruptcy, I didn't go bankrupt, but it was scary times, cash flow challenges in the economy, everything else, I still had capital. It kept me sane, and I was able to support the business and support myself simultaneously. Now,
correct me if I'm wrong, but you call that the wealth tax, right? You tax yourself so that you can retire and be wealthy, right?
Without a doubt. And, the best example that I actually wrote about in Money Master the Game, which was Theodore Johnson, just so people know. Most people think I'm going to get rich by growing my business, and I totally support that. I mean, we're running a new contest called Build a Bigger Business. If people go to www.shopify.com/Tony, we've got a new contest, costs nothing to join, and I send you all my material to train you, and if you have a $1 million to $50 million business, we'll help you to grow. But the wealth tax is, this guy works for UPS, Theodore Johnson. He never earned more than $14,000 in a year. That's the most he ever earned, and he retired with $70 million.
Insane.
Gave away $35 million, was alive. And how he did it was, a friend of his said, I want to make you rich. We're going to put a tax on you, a 20% tax. He goes, I can't spend 5% of my money. I need every penny. He goes, you'll adjust. If the government came along and said there's a 20% additional tax, you'd scream, you'd yell, and you'd pay it, and you'd adjust.
Right.
So he got him to do that, and that compounded is what put him to $70 million, never making 14 grand. So you want to be in business, but in order to do that, the old phrase that when a person with experience meets the person with money, the person with the experience ends up with the money, and you end up with experience, right?
That's right.
So this book is designed to change that. Now, let's talk about the core four.
Core four.
The first step, if you haven't done it, which I assume most people have, is you've got to decide that you're going to become an owner and an investor, not just a consumer. Mm-hmm. You've got to take a percentage of what you earn and set it aside. Now, it's hard for business owners because they're pouring everything into the business. But you and I both know the biggest mistake in finances, everybody knows, is you can't put all your eggs in one basket. And yet most of us do that with our business. So my number one reason for joining you right now is I want to get them to set up another account if they haven't already.
Yep.
I want them to automate that account. And then these books will show you how to create the asset allocation you want.
Right.
Or you can go to, my co-author of this book, by the way, is Peter Mallouk. Mm-hmm. I never co-authored before, but he's my partner in business. He owns Creative Planning. Mm-hmm. I'm on his board. I'm the head of investor psychology for the firm, and I'm his partner in businesses. So his business has grown from the $500 million business in 2008 within 2 years with absolutely no advertising. Mm-hmm. He took that business to $2 billion. Now it's $23 billion. Partners. And the reason he grew it is because he warned people what was going to happen during the crash. He didn't know when it was going to happen. He said, here, it's going to happen. And when it happens, this is what we're going to do so you don't lose 50% or 20%. And here's what we're going to do to take advantage of it. So I want people to know there's a plan in here for that. But one of the things I did when I interviewed all these people, as I said, coming to your core four, is I'm interviewing like Sir John Templeton, who made all his money when blood was in the streets. Right? He waits till the worst time, and he believes maximum pessimism. You interview somebody like, my friend Paul Tudor Jones. I've been coaching for 24 years. Paul's a macro trader. Yep. You go over to Carl Icahn. He's an activist investor. They all do it totally differently. So what I found, though, is there are 4 things that they all obsess about, even though they're different. And if you do these 4, they're like the mini checklist for deciding what you're going to invest in. How to invest in those things are different, but what to invest in.
Right.
And the 4 are really simple. Number 1, you have to, these guys are not obsessed about making money, which you would think they are. They're obsessed about not losing money.
Right.
And the average investor is, how do I make money? They know that if a market drops, a crash drops 50%, you don't have to make 50% to get even. You got to make 100%. Yeah. You understand, Bill? If you got 100 grand and you lose 50%, you're down to 50. And you say, okay, I'm going to grow at 50. That's only 75,000. You have to grow 100 to get even. It might take you a decade. So the way they do that is by creating an asset allocation, dividing up their assets in a way so that when markets drop, they never get hit. So that's number 1. Number 2, the one that's more sexy is called asymmetrical risk reward. Yes. Every single one of them are obsessed with it. And all that is most people think that if I'm going to be an investor and I'm going to make any money, I have to take these huge risks in order to get huge rewards. And it's quite counterintuitive to the opposite.
And I'll stop right there for a second, because that's also what you're being taught, right? But the people that are the brokers, not fiduciaries, and we'll talk about that later, the people that are selling you the assets are like, well, you can't go out there and just expect to make a huge return without investing something. You got to risk it all to make something. And so we've been trained incorrectly that you have to risk it all to make anything, even 10%. So you risk $1 to make 10 cents. You're saying do the opposite. Risk 10 cents to make $1.
And that's what the greatest investors do. And it's not easy for them to do by any stretch. It's hard to find those opportunities, but they focus on it. So, for example, Paul Tudor Jones, who I've coached for 24 years, hasn't lost money in 24 years. Paul's whole approach is 5 to 1.
Yeah.
If I'm going to invest $1, I'm going to risk $1 to try to make 5. That's a good risk.
Yep.
Right? Now, if I'm wrong, I can risk another $1 and still make 5. And guess what? I'm still up. He can be wrong 4 times out of 5, and he's still, he breaks even.
Right.
Kyle Bass is the gentleman who took $30 million, sounds like a lot, but he turned into $2 billion in 2 years. And he did it in 2008, 2009, worst time in history. But the reason he did it is he never risked more than 6 cents to make $1. So he could have been wrong 15 times, Bill, and still made money.
It's amazing.
So, or a really good example is, I just saw a picture of him a little bit ago. There's a TV screen somewhere in my back of my eye. I saw it somewhere. Was President Obama today was out there with my friend Richard Branson. He's doing kite sailing. But Richard is a perfect example. He risks his life all the damn time. He takes enormous risks on boats. About a month ago, he crashed on one of his bikes, and almost smashed his head in. He's always doing something crazy. But he doesn't take risks in business or investing. His risks there are minimum. His number one question in investing and in business is, how do we protect the downside? That's so right. When he went to go do the purchase when he went to open up Virgin Airlines, he's competing with some of the biggest firms in the world. And his brain is like, I got a lot of risk here. I'm buying these Boeing business jets. This could literally put me under.
Right.
So he negotiated for a year before he convinced them to let him work for 2 years. And if he went under, he could give back the jets and pay nothing. And he pulled it off. And of course, he didn't go into business. So he had no downside, all upside. That's
amazing.
The asymmetrical reward. And then the third one is, you don't want to start with this, but you got to understand tax efficiency.
Yes.
If you try to make investments based on tax efficiency first, you're making a big mistake. At first, it's not lose money, it's asymmetrical risk reward. But if you got those two, you can only spend what you keep.
Right.
And when you look at your mutual funds return or all these returns, it's all gross returns. You got to look at fees and taxes to know where you really stand. And so you got to make sure you're tax efficient. And then the fourth one is obvious. It's diversification. It's only free lunch. Yes. So the gentleman, David Swenson, who's the head of Yale, CIO, Chief Investment Officer of Yale, took them 200 years to accumulate $1 billion for Yale. He turned into $1 billion and $25 billion in 2 decades. It's unheard of. He's the greatest institutional investor of all time. Yeah. He said to me, Tony, it's diversify it. Diversify across assets. What most people do is they grew up and their family flipped houses, so they love real estate and flip houses until they get crushed.
Right.
Or their family loves stocks, or they love gold. And what Ray Dalio told me was, no matter what you like, if you don't diversify radically across the board, there's going to be a day when your favorite asset class, your real estate, your insurance, your gold, your stocks, whatever it is, your bonds are going to drop by 50% to 70%. If it happens later in life, it's too late. So you diversify amongst assets, amongst asset classes, amongst countries, and across time.
Yes.
Those 4 everybody has in common. And I use those in my checklist when someone's coming to talk to me about investments. Tell me how we're not going to lose money. It's not the question you usually hear, right? How are we going to diversify? What's going to be the asset allocation? Show me what the asymmetrical risk reward is. Show me how are we going to do this tax efficiency? And then how are we diversifying that? When those 4 are there, it gives you this checklist that's second to none in my experience.
So it's brilliant. Those core 4 is basically how people, when implemented successfully, along with paying the wealth tax, you tax yourself first, take that 20% off the table, and then use those
10
core 4.
Or 15, wherever they can start.
That's right, exactly. And I also love your idea of the future cash. If you can't take 20%, start with 5% and promise every time you get a bonus, every time you get a raise, ratchet it up until you get to 20%, because everybody can do this. The problem is, if you don't get that discipline early on, you spend what you make, just like a business, right? So you need to be able to get in that position. So now,
I tell people that are in business, by the way, who are watching right now, who maybe the business is not yet profitable or it's just barely profitable, and they're saying, Tony, I can't put this money aside. What I say to them is, you've got to put this tax on yourself, because you will adjust. I went through a divorce years ago. It was a really brutal divorce. The woman I was with is a good human being. We're good friends right now.
Good.
But she got an 8 times multiple on my businesses when my businesses were not billion-dollar companies. They were like $100 million companies, and they all depended upon me.
Right.
So I didn't have 8 times that I had to pay this woman. It was crazy. And I had to pay her $1 million a year before I opened my eyes, before I fed my family or anybody else, right? And when I met her, she was broke. So it was kind of disconcerting.
Yeah. And
I used to be frustrated and angry. One day I just said, take it off the top, automate it, don't ever let me see it, and I will find a way to do it. And after I did that, after 3 or 4 months, I forgot about it. And, 17 years later, it was paid off last year. And I looked around and said, my God, I didn't even think about it very much during that time. And I made more than enough money. Your brain will adjust, but you got to do this. And like you said, start with 5 or 10 or 15 and build up to it. You'll get to where you really want to be financially.
So now, one of the questions that I was really interested in Money Master the Game, and then it was revisited again in Unshakable, was the fiduciary standard, right? And the thing that's really important for me here is that I was so relieved in the first book that I went and I talked to my guy at Merrill Lynch, and I'm like, okay, he's actually a registered fiduciary. Okay, fantastic, check the box. And in this book, he said, but wait a minute, he's also a broker, isn't he? And I'm like, no!
Oh, I know. Let's clarify because, very sophisticated business owners get screwed by more sophisticated investment people. Yes. And let's talk about who the investment people are for a second. So there's 310,000 people in the investment community, financial advisors, wealth advisors, but I think there's 225 different terms for a broker.
Yes.
That's what it is. And there's nothing wrong with a broker. A lot of brokers are high integrity people that really give a damn, but they work for the house.
Yes.
And the house always wins. See, these companies, these financial companies are not bad. They're just corporations whose job it is to maximize shareholder returns.
That's right.
So how do you do that? By charging you more and more fees and ideally not having you notice it so you don't object. And so the entire system is wired that way. So of the 310,000 people that are out there, 90% are brokers. Only 31,000, 10% of them are fiduciaries. Now, what's a fiduciary? It's a big word. The broker just has to provide investments he calls suitable. Suitable means it's a suitable meal. It's a suitable conversation.
It's okay.
It's okay, right? And what it is okay is he thinks it aligns with your goals. There's no way to enforce this.
Right.
But if you choose to be a fiduciary, that means you say, I don't take commissions. I'm not making money off of you. I am going to be paid for my advice to you. And my advice will be transparent because there's no secondary gain.
That's right.
I'm not going to recommend you go to this fund over here because I get a 3% commission.
Right.
I'm just going to recommend what's best for you. And so that person is legally required to give you their best advice. So if they tell you to buy Apple this morning and they buy it after you this afternoon and they get a better price, they have to give you their stock. That's how strong the laws are.
Yes.
But it's this tiny group of people. So I wrote about it in the book. I donated 100% of the profits of the book, as I told you, fed 100 million people. And then I built a platform with some technology people because the biggest problem is finding out what people are charging you. Because the challenge in this stuff is that most people think they don't know what they're being charged. And if they do, they'll tell me 1%. That's what their broker will tell them. Well, 1% is only one of 17 fees. The average mutual fund has 3.12% in fees, which still sounds small. It's only 3%.
No, it's a lot.
The difference between 1% and 3%, watch this. You got $100,000, you're 35. Your buddy has $100,000. You both put it in the market. You both invest in the same equities, the same stocks, through a mutual fund, but 2 different mutual funds. One charges 3%, one charges 1%. Well, at 30 years later, at 65, if you didn't add a dime, your $100,000, if you were charged 1%, is worth $762,000. Wow, 100 grand goes to 762, nice. Didn't add a dime, pretty damn good.
Yep.
But if you had the same stocks, but you pay 3% in fees, you got $452,000. You got 40, 50% less money, and also it's going to run out quicker. The guy that, managed to charge 1% in fees got a 762. He's taking out like 60 grand a year towards paying for things. He's going to have money till he's 92. The other guy's going to have money till he's 78. So, you're going to run out of money, and then what are you going to do? So it's so critical to manage the fees. And the fiduciary side, here's the kicker. So I write Money Master the Game. I'm proud as hell of it. It goes to #1. People's lives are being changed. Everything I hope. We feed 100 million people. I'm feeling really happy and satisfied. And then Peter Maluk, my now partner from Creative Planning, calls me up and says, Tony, I want to meet with you. You care so much about people, and the fiduciary standard is such a big piece for you. There's a gray area in the law that's being abused, and I really think you need to know about it. And I don't think clearly no one has told you, and no one's telling anybody else about it. So he flew out to LA, met with me, and he proceeds to tell me that a fiduciary, I'm saying to you, I'm telling you the best advice. I'm not getting anything out of it except my fee. And the fee is usually 1% or less, or a flat fee, whatever it is. Well, these fiduciaries, of the 32,000 fiduciaries out there, registered investment advisors, out of all of them, that 10% of people at the bottom, only 1.5% are not duly registered. Now, what does duly registered mean? It means that they're registered fiduciary, and they'll tell you, I'm a fiduciary, but what they don't tell you is I'm also a broker. So in the middle of the conversation where I'm telling you information that's only your benefit and you're feeling safe, I turn my hat over and now I sell you something that I'm making it not because it's best for you, but because I get a higher commission on it. One guy looked me in the face, a guy I consider to be a friend. I'm a fiduciary, I'm absolute fiduciary. I saw I was a fiduciary, but he then proceeded to sell me on a group of funds that when I did further investigation, I found out he's also a broker, and I found out that one of those funds he owns. He just has it under another company name, so you don't know it's him. And another one of those funds, he doesn't get commission because that would be illegal, but he gets a consulting fee from the place. So
all the loopholes.
If you want to know why the financial business is so bad, 1.5% of those people are registered investment advisors and not brokers.
Which is about 3,000 people in the entire United States. So out of 300,000 financial advisors in the U.S., 310,000, there are 30,000 that are fiduciaries, roughly. And of those 30,000, about 5,000 actual fiduciaries. And then of that, there's about 3,000, right? 3,000.
No. I'm sorry, I misspoke. There's 32,000 fiduciaries,
right.
But there's only 5,000 in the whole out of 300,000 that are real registered investors. And that's not enough. You could be a registered investment advisor. I had one guy. I did 100+ interviews. You were one of them last time we did Money Master the Game, and got an unbelievable response. Only 2 negative articles, both written by fiduciaries, one of which managed $100 million. And his criticism was Ray Dalio doesn't know what he's talking about. Ray Dalio runs a $165 billion firm. And he first said, what I wrote wasn't Ray. And then his second thing he wrote in the newspapers was that Ray Dalio doesn't know what he's talking about because he changes in bonds. I mean, this is the world we live in. You can even have a fiduciary, but not very sophisticated. So even amongst the 5,000, you need somebody that knows how to manage things and has been through the wars and has been able to produce great results through time. And so that brings the number even smaller. But in the book, I give you the criteria to test. So, and if people want to see our firm, Creative Planning, they can go to getasecondopinion.com, getasecondopinion.com. And if you go there, you can fill in the information and our team will evaluate it and give you a plan. If you decide to work with us, their fees are 85 basis points is their average. If you got a lot of money, it's down to 25.25. If you don't have a lot of money, it's closer to 1%. But the point is they'll do the plan for you and then you can work with us or you can go do it on your own either way. But that's our way of adding value. And I got Peter. Peter's strength, so is billionaires have home offices. They usually have 10, 12 people. They don't just work on an investment portfolio. They work on your mortgage rates. They make sure your accounting and your taxes, everything is done well. Well, Peter does that now for years for millionaires, meaning doctors, lawyers, small business people.
Yep.
And then I convinced them to do it for people with $100,000. So,
amazing.
And if somebody has less than that, they'll still do it. So people can go there also as another choice, or they can just use the criteria and find their own person.
So Tony, in your book, one of the other things that I loved is this book is coming out the end of the month, end of February, right? So, and what I love about it, in the book, you specifically say, hey, in 2012, the Obama administration passed the fiduciary standard for 401ks. And I was so excited because you're right, because finally, for the first time in history, not only do they have to disclose what the fees are for the 401ks, because most people don't even think there are any fees, so that's the huge issue, but more importantly, now they actually have to put your interests above their own. And I was all excited about this until last week. What happened last week, Tony?
Well, President Trump has decided, along with his team, that they want to roll back the rule before it comes out. But by the way, the rule was already gutted. Obama had, and the Department of Labor had a really good idea. They said, look, there's $17 billion being ripped off from people every year by hidden fees. Let's make these guys have to be fiduciaries, at least on your 401k. They can screw you everywhere else still, but our trade-off will be they won't screw you on the 401k because 90 million Americans have a 401k. More Americans have a 401k than a house. 75 million Americans have a house. And so when I dug under it, here's what you find about the 401k industry. It's mind-boggling. $6 trillion with a T, $6 trillion industry. And they did not have to tell you for 30 years, up until 4 years ago, they didn't have to tell you what they were charging you. If you ask people today, the latest survey shows 71% of Americans think they pay nothing on their 401k. And the balance that know they're paying something don't know what they're paying, right? So what industry on earth can come and just take your money without telling you what it is for decades? So 4 years ago, the Department of Labor changed the rules and said you must disclose what you're charging these people. So their solution in the financial industry, typical for the financial industry, is come up with 35 to 50 page documents where the answers are hidden in the documents, where if you have a PhD in economics, maybe you can figure it out, right? But what's really amazing, though, today on this side is today now it looks like we're going right back to where things were before the Obama group started working on this, and you're not going to have somebody be a fiduciary. There are people in the 401k space. You can go to showmethefees.com, and I've got partners there in a group called America's Best 401k. And what we did was, when I worked with Jack Bogle, the first thing he said to me, Tony, was, I know you're sincere. I came for 35 minutes. I spent 4 hours with him, right? He goes, this has been the most probing, penetrative interview of my entire career. He goes, I see you're sincere. I see what you care about. He goes, I want to help you. He said, you've got to work on 401ks because that's where most people are being screwed first.
Yes.
So I started digging under the piece in the 401k side. And what we began to find out is, if you go there are firms, most people know, you want to make sure fees matter, so you want the lowest fees possible. Mutual funds, active mutual funds are not going to be that. Active mutual funds average 3.12%. Active mutual funds, 96% of them fail to match the market in any 10-year period of time. Only 4% do it, and the 4% are always changing, so you're not going to find them. So it's not going to happen there. Index funds, as you well know, like, for example, Vanguard would be an example of that, right? The S&P 500 by Vanguard. You can get that for 0.055%.
Wow.
But if you go to your 401k, I can show you, because people, go to showmethefees.com, they fill in a couple pieces of information, we show them what they're really being charged, and we show them what it means over the decades, because it compounds, right? So we save $5 million for my employees, and we have the same stocks, the same products. It's like, do you want a Honda Accord for $20,000 or $900,000? It's the same car, right? That's what they do in this industry. But what we really did there, we dug underneath. Some of these guys, most of them, if you're a small company, which is where 80% of people live and work, they don't usually have, on your 401k, they don't usually have the ability to put them into index funds. And the reason they say is your firm isn't big enough. What they're really saying is, I can't make enough money off of you on an index fund, so I'm going to send you a mutual funds, which all pay to play, which means they pay to be on the platform, they pay the firm, so they pay the most, they're on there, and then they charge you back all that they paid the firm and a bunch of fees, so they get all their money back and then some. It's just mind-boggling. You'll see Vanguard that we get 0.05. One firm, I won't say which one, charges 65 basis points because they do allow you to have it. So they're marking up 0.05 to 65 basis points, like 650%. Some charge 3% to enter the program and 2% a year. Now, if you're making 6% a year and 3% is gone in fees, how are you ever going to get to financial freedom? It's not going to happen.
And yet, when the actual fiduciary standard was repealed last week, and I quote, "This is a solution in searching for a problem. This is a solution in search of a problem." And that's what the Congress is telling us. They're like, we don't need this. So the presidential scratches the order. And then everyone says, yeah, it was never a big deal anyway. Thank you, financial lobbyists. So my whole thing is, I'm so glad that you put a big, bright light over all of this, because essentially you're one of the few people I know who break this down into very simplistic language. See, simplicity to me is the hardest thing in the world, because anyone can basically send you 50 pages of gobbledygook and say, good luck and hope you can figure it out. That's what they did to hide the fees in the first place. You took the time to interview the smartest people on the planet in financials and then bring it down, not to just to 620 pages, which I love then, but now to less than 200 pages to say, guys, this is what you need to know. If you want to know how to retire rich, you want to know what this is what you do.
Here's the plan.
But the best part is the final part of your book, which I think is by far the most valuable to anyone who reads it, and it has nothing to do with finance. It's about how to be wealthy on the inside. And truthfully, if you choose to be happy and you can basically be rich the moment you make that choice to be grateful. And I love that part of it, because I know people who they have $100 million in the bank and they're miserable, and you can't feel sorry for them.
Well, there's nothing worse than an angry rich man or woman. You want to just bitch slap them, right?
Exactly.
No excuses. But it's the nature of the human mind. What I really want to do after writing the whole book, as I said, I feel remiss if I showed you how to become wealthy in financial terms, but I didn't show you how to truly be truly happy. And I know that sounds like a big promise, but I've spent 40 years of my life basically studying what it is that makes people perform at the highest level. And then about 20 years ago, and then really intensely 2 years ago, I became obsessed with God, I know all these people are so successful. Why are they so unhappy or frustrated or overwhelmed? They're stressed all the time. I mean, stress is the number one thing when you meet people. They talk about, I'm so busy, I'm so stressed, I'm so this. And so about 2 years ago, I've been studying so many different ways to help people increase the quality of their life, but I was in India with a friend of mine named Krishnaji, and he said, Tony, you know how you teach that if you have peak energy, if you're energy rich, the world is different. You think differently, you interact differently. If two people are in really high levels of energy and they're together, they're going to have a great relationship. Two people love each other in really low energy, they're going to say things and do things that'll mess things up in their relationship very often. So he said, you talk about being peak state or energy rich versus energy poor, or peak state versus lousy state. He said, what if you traded those words for peak state would be beautiful state,
yes,
and low energy state would be suffering.
Yes.
I said, well, what's the point? He goes, I think if you made that little shift in your head, you could notice something. And he said, here's what I think you'd notice. He said, Tony, almost everybody suffers no matter how much money they have, no matter how great their kids are, no matter how great their spouse is. And I said, well, suffering didn't jive with me. Like, you two, we're all overachievers. Like I always say, achievers, overachievers never get stressed, never get fearful. They just get stressed.
Right.
So stress is the achiever word for fear.
Right.
And similarly, suffering. If you told me 2 years ago I was suffering, I'd tell you, you're crazy. I got the most incredible wife in the world, 4 incredible kids, and a mission, and economic freedom, and physical health, and I wouldn't be lying. I would be telling you the truth.
Right.
But when I made this little distinction, it made me measure more. And you can't manage something you don't measure.
Yes.
And so I started measuring, because I started realizing, okay, what's a beautiful state? It's not just happy. If you're happy all the time, your face hurts. You gotta have happy or creative as a beautiful state, or determined, or loving, or grateful. I mean, we can name 500 words, emotions that are positive emotions that when you're in them, you do what's right.
Yes.
A suffering state is like frustration, anger, disappointment, resentment, fear, worry, concern. And I had to be honest, I get pissed off, I get frustrated. I mean,
yes.
In fact, I realized how cheap my happiness was. I don't have it on. Oh, here it is. All I had to do was pick this up and my happiness would disappear. Right? Because, when you got 1,200 employees on 3 different continents and 7 different industries, what are the chances that someone right now is screwing something up?
Just a little bit.
100% awesome. With that many people, so many moving parts. So if your happiness requires everybody behave the way you think they should behave, treat you the way you think they should treat you, do what you think you do, it's never going to happen. So what I began to do is say, I need to draw a line in the sand, and I'm going to make a decision. And I got this from my friend Krishnaji. He goes, my spiritual vision is to live every day in a beautiful state no matter what. Not so I'm positive, because I'm smart. Because stupid people allow themselves to stay in a lousy state.
Amen, brother.
In a lousy state, you don't treat people better. Lousy state, it affects your health. Lousy state, you don't have a great time in your life. So it's not about being positive, it's about being smart. And so what I began to do is say, I used to try to convince myself that when I'm pissed or whatever, I get smarter. I do get stronger. But I get even stronger when I'm not pissed, and I'm playful and I can have the enjoyment of it. So I created a 90-second rule for myself, and I'm bringing this real short because I know we're running out of time.
Yep.
But in essence, what I did is I recognized the tension in my body when I was feeling frustrated or concerned or worried or pissed off or anything. And the minute I feel that, I give myself 90 seconds to get out of it. And it's easy to get out of because all you have to do is change your focus.
It's amazing.
Even if we've all been to a funeral and everybody's crying, and then somebody says something about the deceased or tells a story, and you're not supposed to laugh, but it's so funny, and you go from crying to laughing your guts out, right? That's just by changing what you're focusing on. So all I did was every moment of our life, there's something to appreciate or enjoy. And when you appreciate and enjoy, stress disappears, fear disappears, all that shit disappears. So I find something right away. And what triggered me also was, again, Sir John Templeton. I asked him, what's the secret to wealth? Self-made billionaire.
Yeah.
Brilliant man and an incredible giver. And he said, Tony, you don't know it, you teach it. And I said, well, I teach a lot of things. Which is it? And he said, gratitude. Yeah. He said, how many people do you and I know that are billionaires that are miserable? And he said, how many people do you and I know? I'm sure we both know people that have almost nothing financially and they're incredibly happy, like Fiji, as you know, right? The happiest people you ever meet, and they're anybody else to think they're in poverty. Right. And the reason is because they're grateful. They're grateful for their health. They're grateful for the weather. They're grateful for their children. They're grateful for everything. And because they're grateful, they're rich. If somebody's got $5 billion and they're pissed off all the time, their life is pissed off. So I gave myself the 90-second rule. It should have been a 4-hour rule in the beginning. I wasn't as good at it, right? But as you do it more, you get better. And now I'm really good. It takes a lot to do it. And what it does is it gets rid of all the drama. It gets rid of all the stresses. It puts things in perspective. The whole thing, don't sweat the small stuff. It's all small stuff.
Yes.
You still are on top of things, but it's just the level of enjoyment I have. So what I want people to do is they read this book. I teach you a series of tools you can use. I take you through a closed eye process. We have an app we give you that's free that comes with this as well. And you go through the app and you do this process, and I take something that maybe it's unfinished business for you in your personal life or your business life, something that you're not dealing with because you got so much on your plate and it's just so stressful to have to deal with that stuff. And in 2 minutes, I have people do this with 10,000 people in a room. I teach them this technique that changes your state. And then I have them answer a couple of questions, and they got the answer. And you ask the room, 98% of the people in 2 minutes will have it be eliminated. Now, there's lots of techniques, but I put that one in the book for people as well. My goal is be rich right now. Feel that sense of aliveness right now and build your financial freedom. You don't have to choose between the two.
So, Tony, you've been incredibly generous with your time. So, Unshakable is on sale now. You can actually go to unshakable.com to pre-order it. And when you do, you get a special gift, right? There's a free gift if you order it today. And it'll be out at the end of February. Is that right?
Yeah, February 28th.
February 28th. Listen, it's been amazing. Thank you so much. I always enjoy speaking with you. You are an incredible master. I appreciate everything you said and done. And I'm sure anybody who picks up this book is going to be thrilled. Last thing. Every cent of the profit from this book goes to feeding America. So your goal in the next 8 years is to feed over 1 billion people. And so this book, just like the last one, this is not about making you rich. This is about helping people find wealth in their lives, both physically, financially, as well as emotionally. And all the money that comes from this book helps actually feed America, which is amazing. So thank you for that.
Every book feeds 50 people, to give you an idea. And if you decide to get more than one for your friends and so forth on our website, I have some other gifts for you. If you get 5 books, I think we've got a piece where you get my most successful program of all time, The Ultimate Edge, at literally no charge digitally. So I really want to get this out. I want to affect as many people as possible. And I want people to get this before the market takes a tank so they can be protected and also so they can take advantage. I just want to plant one other seed for people. You got to know that if you're trying to time the market, you're going to be a disaster. One of the most important statistics in this book, from the facts that I found, has to do with the fact that if you were in the last 20 years, JP Morgan and Charles Schwab both did independent studies. In the last 20 years, the S&P 500 averaged 8.2%, which is really great, compounding your money like crazy. But to give you a sense, if you miss 10 of the best trading days in 20 years, you think you're going to time the market. You just missed the 10 best trading days. You went from an 8.2% to almost half, 4.5%. If you missed 20 of the best trading days, you made 2%. If you missed 30 of the best trading days, you lost money.
Amazing.
And 6 of the 10 best trading days in history happened within 2 weeks of the worst time. So I hope when you'll pick up this book, because what it'll do, it'll teach you the patterns, and it'll free you from being one of the many. It'll teach you to become the chess piece instead of the chess player. You'll be, one of the few versus one of the many, and it will change your life. And with your life change, you'll be able to do so much good for others. And as you said, it'll touch other people too. Amen, Bill, thanks for having me on, man. I really appreciate it.
Thank you so much for having me. I appreciate it. Thanks, Tony.
Take care, brother.
Bye.
Bye-bye.